that it reported, but what it announced has caused the stock at one point to be up 11%. It's actually up 10.35% during the overnight hours. If you know anything about Lululemon, you know that it's kind of been struggling since it hit highs of $5.16 per share, currently trading at lows of $2.06 with that 10% push. But right before the close, we were nearly at 52-week lows. We're at 180. Previous lows were 159. But as you guys can see, the story has been lower highs and lower lows pretty much all of 2024 to 2025. We did have, and that's one thing that I kind of have to give it to. It does have these V-shaped recoveries, but they kind of tend to be short-lived. They, try to recover and then it just gets rejected. It tries to recover and then just gets rejected. So it does have recoveries along the way, and I think that's what makes it kind of attractive for those style of traders, right? Some people don't like that, and I respect it, but I can see why others that like to trade reversals and maybe swing trades, catching something this oversold, seeing if it runs up to 230, 240, maybe in this case, getting a little bit closer to the 300, why that could be so attractive, right? Especially percent growth wise. Again, if you were to be able to catch it at that $200 price point to previous highs, the previous resistance range would be right around that $300 price point. That's a 54% return. But for those that did not hear the news, yes, Lululemon stock surges 12% after company CEO says that he is resigning. Now, not only that, but also there was a total of $1 billion increase in its stock repurchase program. And of course, the CEO stepping down. I do believe that the CEO stepping down is obviously a big focus. If we actually pull up Lulu on Investing Pro, again, friendly reminder, if you guys ever want to use this software yourself to be able to dive a little bit deeper, it's going to be the first link in the description down below. But Lulu has a very low PE ratio. That means that you're paying a very low premium to own the stock based off of what the company is valued at to what the company actually makes. So when we look at the current valuation, again, you don't have to agree with it, especially if it does not align with your criteria. Maybe you're a little bit more tech focused, more AI, maybe more crypto focused. I don't know who you are, right? Market cap, $22 billion, especially after losing nearly or more than 50% of its market cap value. But being at a $20 billion market cap, its revenue is 50% of that. And then its net income is $1.7 billion of that. This company makes more in revenue than almost every BS wannabe AI aspiring company combined, right? All those pre-revenue companies. I'm not talking about the NVIDIA or the Meta. I'm talking about all those pre-revenue companies that are nowhere close to making any real money. Lulu actually does. It has $10.9 billion in sales. Its revenue